Italy's economics tilted in economic downturn at the end of recent year, on to newest figures. In the definitive 3 months of 2018, the economics shrank by 0.2%, next a 0.1% decrease in the tertiary bloc, the Istat Statistic Office space told. Italian Main Secretary Giuseppe Conte told the reduction was potential to go on in 2019. Meantime, figures of the EU showed economical increase in the 19-nation eurozone yet yearning. Increase in the euro region remained at 0.2% in the definitive bloc of 2018, the identical as the early bloc and in link in analysts' consumer expectations. In difference to Italy, some eurozone economies advanced more than rather than anticipated, in France and Spain wiring increase rates of 0.3% and 0.7% block-on-block accordingly. Italy's Statistic Office space told farming, forest management, fishery and production had all introduced to the economical downturn, time a growth in net supply unsuccessful to displacement such declines. The renovated economic downturn in Italy aggravates the issue the government has in its finance. The governing party's wish to growth conducting to encounter poll campaigning commitments led to a stay-off in the Europe Committee that reasoned Italy was departure to be loaned to lot. Rome paired behind its plans and the controversy was solved. But the reality how the economics has rotated out to be the weaker is bad news story for the government finance. Tax income will be hit and how will tend to conduct to a greater finance opening to be imbued by loan. Italy's issue is its gained obligation, that is on one action the greatest in the eurozone. It would be an enormous issue for the otherwise of the eurozone if Italy were to afflict the type of obligation meltdown how Greece and others skilled a few years back. How is not a close-term perspective, but Italy's constantly poor economical productivity makes it really difficult to expel how hazard finally. Italy has the largest by the government obligation in the EU at more than rather than €2.3 billion, pound 2 TN. It is as well the 4th largest by the government obligation in the planet. The nation's obligation load as a percent of yearly economical operation is other just to Greece in the EU at 132%. Klaus Vistisen, head Eurozone political economist at Parthenon Macroeconomic, told how the common Eurozone figures don't cute, but include been so telegraphed by the difficult information and the finance marketplace terror Shaw in question 4. Really, it seems to us how markets will be prone to see at these title figures as nice news story. They specify how things perhaps when get lot worst in the close period, the is a brave supposition, taking into account impoverished January examination information, and how the ECB will hold rates low for a length period.